Hello, everybody. Jeff from Fundamentally Smart here with you today to review Nintendo. Can be found under NTDOY if you're going to be trading here in America. And the stock ticker on the Tokyo Stock Exchange or the Japanese Stock Exchange, you're looking at 7974.T. We're going to try to go through this relatively quick here, try to keep it under 10 minutes if possible. So let's go ahead and dive right in. One of the major things that stands out about Nintendo, and I mentioned perhaps a little bit in the previous video, is the fact that it is headquartered outside of the United States. We see that down here. They are obviously a Japanese company. And that can pose a little bit of concern here for a multitude of different reasons. But in the case of Japan, a U.S. ally, a relatively established, peaceful company, especially in these peaceful country, excuse me, especially in these times, that's a big benefit here. So there's a little bit of concern with it being outside of the United States, but it's largely going to be okay. It's not an instant disqualifier. Moving forward, the next thing I like to look at is going to be the PE ratio at 14.46. That's very solid. That's well within our range that we want to see out of any company generally. We'll want to compare that to some of the industry competitors as we further do some more research beyond our initial checklist. But at this point in time, the 14.46 falls well within to our allowable range. Moving forward from that, we're going to want to look at debt to equity. That can be found in the statistics tabs. Now, with some of these international stocks, we may also want to look at their home listing, and that might have some more accurate or better information. For now, we'll take a look and see if we can find it here. Doesn't look like we can find it under the OTC ticker. Let's see if we could find it under their home listing. Statistics doesn't look like it's here as well. That's okay. That's no problem. Many other places will still have it. In this case, the Merrill Edge stock screener does have a debt to equity of 0.31%. That's incredibly low. That means they virtually have almost no long-term equity on their books. There's nothing weighing them down. No long-term debt weighing them down. That's virtually zero. That's a very good sign that they're not overburdened with debt or anything like that. Moving forward, a quick look at the industry and the sector here. Coming back to summary. We can see that under company profile, sector, communication services, industry, electronic gaming, and multimedia. Now, what's kind of unique to Nintendo is that they're specifically a video game company or in the video game industry, but they manufacture physical hardware as well as make games. And that is not really something you see with a lot of their competitors. Except for maybe Sony and Microsoft, but they have so many other divisions within Sony and Microsoft that really hold up, that make up the majority of their company. So Nintendo's kind of unique in the sense that they do both hardware and software, but that's all they do. There's not many other companies. Tencent, to my knowledge, has been trying to branch out into the hardware space. They've been researching that and trying to really build into that, but it hasn't gone too successful for them. It hasn't become too popular yet. So moving forward from that, we're going to take a quick look at the market cap. This market cap here is listed in US dollars. We see 58.37 billion. It's a very sizable company. There's not a lot of concern on either end on it being too high or too low. As I mentioned before, both can pose a risk there for us. But in this case, we're right in that sweet spot. We're right in the middle. It's a very solid spot to be at 58.37 billion. Moving forward, I want to take a look at the profit margins, and this time we're going to actually look at all three profit margins. That can easily be done through the Merrill Edge stock screener as well. Not sponsored by Merrill Edge, just one platform that I've used in the past and very easy to look at. So we can see right here, this is going to be your net profit margin, your operating profit margin, and your gross. Gross profit margin being rounded up to roughly 55%. Is decently high. It's not the highest I've ever seen, but it's certainly quite up there. Operating profit margin and net profit margin are really where where Nintendo comes in really strong. 36.42% is very sizable. Generally anything above 20% solid. Anything above 30% is good. So at 36.42%, very good, very strong. A lot of profits to fall back on in case of a downturn. They can kind of crunch those margins for a little bit of support there. So that's like what you like to see, and then net profit margin at 27.31%. That's also very solid as well. Anything above 15-20% is very good. Moving forward, we're going to look at the price to 52-week high. We can see that we're 52-week high and 52-week low we really want to look at. We see that we're kind of right in the middle there, which is good. We're not right at that ceiling. Sometimes for certain stocks that can be the 52-week high can kind of function as a ceiling for many stocks. We're pretty solidly away from that, about $16, which is a very sizable percentage in this case. And on the low end, we're about $10 above the 52-week range on the low end, which is also very sizable given the current stock price here for you. So no points of concern there for us. That's very solid. That's very good. Moving forward, we're going to look at the quick ratio. Quick ratio being at 3.67 is very sizable. We're getting up there into where that can be a concern. We're not quite there yet. But carrying heavy amounts of cash could be a cause for concern that maybe the company's not efficiently using its cash. It's not finding new projects to invest in, and there could be some concern in the growth. We're not quite there yet. Usually I typically see that at 5 and above. Anything 5 and above can be an indication that the company's just not able to reinvest their cash and get a reasonable rate of return. Not the case here for Nintendo at 3.67. There's low risk in terms of any short-term liabilities. There's fairly good liquidity here in terms of them being able to pay their bills and everything like that. Moving forward, take a quick look at the analyst opinions. This is going to be one of the things that's best to review under the official or their home listing. Again, for Nintendo, that's 7974 period T. So we'll come down. We'll take a look at the analyst recommendations. We're at a 2.2. That's somewhat high. It's not a great rating. We'd really like to see that at 2 and above. So we're close. We're very close there, but it's maybe something we should look into further to take a look and see why analysts are a little bit skeptical at this point in time. Why have their ratings so low. Our price target, we are below our price target, so that's another important point to look at. This is going to be in the Japanese currency and not US dollar since we're looking at their home listing, but we are below that point, and that's really all we need to know. If we wanted to calculate the percentage below that, we could definitely do that regardless of currency, and that should translate maybe not perfectly into the American over-the-counter listing, but it'll give us a good approximation, and we could do further research beyond our initial checklist here. We'll take a quick look, make sure there's been no changes in the rating. Doesn't look like that's here for us on this one. We'll check the American. On the American side, there was 2 downgrades for the American over-the-counter ticker. Both a sizable period away, and doesn't look like it's any of the same. Let's see here. It doesn't look like it's the same ratings or anything like that. Now, we don't have the upgrade versus downgrade here. We can check the workaround. We could just check it month to month. We see 5 strong buys. Maybe there was 1 or 2. Yeah, 2 people missed ratings in December. So no cause for concern. I don't see any recent big swings in terms of that analyst recommendations. Moving forward, we'll take a quick look at their earnings and make sure they have been exceeding. So we do see beat, beat, beat here. That's a very good sign. That's very healthy. That's what we like to see. Some misses here can be indications that the company's struggling beyond what how analysts perceive it should be performing. So good to see 3 beats in a row. We could also check that on here just to see if we can get a good look. It looks like when you account for a few more analysts, there was 1 miss here by a small margin, but it wasn't missed. So that could be a cause for concern. We'll take a look. Maybe we'll read the notes of the conference call to see if there was any indication given as to why they missed. We could read the notes in our further due diligence beyond our initial checklist. Now we'll take a look at the revenue and earnings. Make sure we have a nice straight up line, and it looks like we are increasing year over year in terms of revenue and earnings. That's a very strong sign that shows reasonable, responsible growth, and sometimes that could be an indication that that's going to continue. So we see pretty much a straight line headed up: 1.06, 1.2, 1.31, and then 1.76. Very solid. Earnings have gone up with it over time. Great sign to see. Next, we'll want to take a look at the news. Let's see here. We'll look through here to see if there's any specific news to Nintendo, any concerns recently. Doesn't look like there's any particular news in here that really stands out to me just doing a quick glance. We'll want to do that a little bit more in depth as we go through our due diligence before we hit that buy button. But at this point in time, we don't see any causes for concern. There's maybe even some support in here over the last week to 2 weeks. Maybe people pushing a buy. You see Motley Fool here saying it's a screaming buy. We could look more into that if we really wanted to, but we covered some of that with the analyst recommendations. Let's take a look and check and see when their earnings date is. Earnings date still very far out at this point. I know we're still kind of at that tail end of earnings season. So they likely reported earnings sometime recently, maybe at the beginning of February. We could do further research on that if we really needed to. We could perhaps check that through financials, quarterly. Doesn't look like it gives it to us here. We just see that it's for the year end. But if we needed to, we could do a little bit further research into that. Moving forward, one thing that we didn't mention last time that I wanted to make sure I got in here this time is going to be performance versus industry and then performance versus the market. If you have a stock that has run really, really hot over the last few months, it can kind of lose some steam going forward. So we'll take a look at that today and see how Nintendo stacks up in that regard. So here I have performance versus industry. ESPO is going to be a video game ETF. Then we have Electronic Arts and Tencent. One notable company I did leave off is Activision, due to the recent bid by Microsoft to purchase Activision. That can throw off some of the performance numbers. So I did leave that off. When we go to compare some of the other statistics like P ratio, current or asset ratio, we can still compare Activision because some of those numbers are still going to be valid despite the bid. But in terms of performance, we may want to leave that off because some of those numbers may be skewed. So in this case, over the last 2 years, we actually see Nintendo pretty in line with Tencent and EA. Some of the other companies have performed a little bit better, and we can see that through the ESPO ETF. But we're right in line on the 2 year grid from on performance basis from 2 years ago. Now, what's oftentimes a little bit more directly applicable is the last 1, 3, and 6 months. So we'll jump into that. For the last 6 months, we actually see that Nintendo has outperformed all of the competitors that we've chosen to look at today. So this could be a little bit of cause for concern, something to look at a little bit further to see why it's been running better. Is if we can determine if that's going to continue moving forward. But at this point, it is something that we'll want to look at more, assuming the pattern continues on the 6-month, 3-month. So on the 3-month, we see that kind of even widen more. On the 6-month, we're looking at a difference of about 15%. You're looking at negative 13% for the video game ETF, but actually almost a 3% gain for Nintendo. On the 3-month basis, we know that gets even wider. We're looking at a spread of 32, maybe almost 33% here between the SPO ETF and Nintendo. Now, again, I want to stress this isn't an automatic disqualifier, but this is something that's going to be we're going to want to research further moving forward, especially with a spread this large. We'll take a quick look at the 1-month. Again, we see Nintendo leads the pack. The spread narrows back on the 1-month basis, but it's still quite large. You're looking at about a 10%, 11, 12% spread there. So it is something, again, that we're going to want to research. Why is Nintendo performing better over the last 6, 3-month, 1-month, but not on the 2-year basis, really? Because if we remember, on the 2-year basis, we're above EA and Tencent, but we're below the video game ETF, which is going to give us an indication of how that industry as a whole is kind of performing. And then following that, we want to look at how Nintendo performs versus the market as a whole, outside of its industry. How are we doing in that regard? So in this case, I took the S&P 500. And since Nintendo is a Japanese company, I took a ETF, EWJ, to look at Japanese companies. Now, Nintendo is going to be part of that EWJ, so it's going to influence its numbers a little bit. But this will give us a good indication of how it's performing versus the market. On a 2-year basis, we see that Nintendo is leading both the EWJ index and the S&P 500. Which could indicate that it could lose some steam and underperform the market moving forward. We'll want to research this a little bit here to see why it's outperformed. If it's because it's got those superior numbers than the majority of the rest of the market, or perhaps it was just a kind of a trendy stock over the last year or two. Moving to the 6-month, again, Nintendo leads both the S&P 500 and the Japanese ETF that we're using. Same thing on the 3-month. The spread widens even a little bit more over the 6-month. 6-month, you're looking at about 10 or 11%. On the 3-month, you're looking at 22%, maybe more. So that is definitely a cause for concern. We'll want to look at it more to research why these indexes are performing so poorly, and Nintendo's performing so positively, especially at a drop in 9% on the ETFs and a gain of 13% for Nintendo. 1 month, we see the same mark. So definitely something that we'll want to look into further. So that's going to go ahead and wrap it up for us today. Quick recap: likes, current ratio, PE ratio, debt to equity, and their profit margins. Concerns is going to be the headquarters outside of the United States and its overperformance over the market. So we'll want to take a little bit further research into that. Thank you for watching. Don't forget to like, comment, and subscribe, and have a wonderful rest of your day.